if you look at the frequency and the size of these hikes, now we have 25 basis points, and the market is widely anticipating another 25, then maybe one more 25. So no matter how you look at it, in hedging your bets, we're 2/3 through the process. So we're in the back end of hikes. Now the question is, do we get a down print on payroll anytime soon? The minute you see that, the Fed will pause. And so there's a chance, and it's no better than 50-50, that this is the last rate hike for a while. And that's what the market's anticipating. So you're going to see a lot of fibrillation on valuations, both on fixed income and on equities, trying to determine is that and was that the last hike, or is there more to come? Now, what we don't know yet, because earnings reports have been pretty good, just the print from Meta yesterday was nothing less than phenomenal. And so at the end of the day here, we haven't really seen the grind into the market of lack of momentum in sales and then margin and earnings. That's anticipated to be coming. So I think it's going to be very interesting this year. My anticipation for terms of what we'll get in returns are going to be around 6% from equity, and I'm talking the whole year, and another 2% from div yield or distribution, so an 8% year, which is kind of right in the middle of what you anticipate. It's because they haven't seen a down print on payroll. They haven't seen any slowdown yet, that although CPI has come down a bit, which is good, but I think the thing that they're looking for, and certainly Powell talks about it enough, is payroll. I mean, it's a very competitive environment now. Try and hire people. We still have a hard time hiring for the positions we have open, so we haven't seen that slowdown yet. So I think he's more focused on payroll than anything. That's why I say if there's a slowdown on payroll, at least one down print, I think he pauses and waits for the next payroll. I think there's a chance that it could be the last one. I didn't say 100%, but I'm feeling that way, and that's why the markets have been rather interesting this year. Most people were anticipating a pretty horrible January. That's not what happened. What I've learned is consumers still have fat wallets. They still have a lot of cash sitting around. They were prudent in terms of all the freebies they were giving out. When we talk to new recruits in their early 30s, people that have already had one job now moving, they have a lot of demands. 40% of them won't work in an office, particularly in infrastructure work or in accounting or payroll or logistics or compliance, those departments. I'm just interviewing a third round for more financial analysts. I found 2 great ones to add to Aluri Ventures. We need them for this North Dakota initiative. Not a chance they're coming into the office. And these guys are, and this one woman, one guy, they've never worked in an office. They don't even know what that means. And so there's a whole new tonality to the workforce that I don't think everybody's adjusted to yet. Look at the data back from 1954 when they started tracking venture capital. And this fund, this initiative for North Dakota is pure venture. It's startups, it's going into early stage, round A, round B companies. And there's a good reason to do that. But think about the data. It says that since 1954, when they started tracking this, 68 years ago, almost 95% of venture capital occurred either around Silicon Valley in California or around MIT in Massachusetts. Now, those are the worst states in the union to do business in. Why would you ever put money into Elizabeth Warren's land, where she punishes you for success, where you get super taxed the minute you start making any money? Or California, which isn't even in business. I would never put money into either of those states, nor New York. I just took a big project out of upstate New York that was going to be powered out of back of the meter in Niagara Falls. It's so messed up, their policy's so terrible, we moved it to Norway. Same thing with New Jersey. The place to do business are in these flyover states that have become very competitive. And the secret sauce is what we were just talking about. Today, 40% of your employees, I don't care what sector you're in, any of the 11 sectors of the S&P, 40%, between 30 and 40, are going to work remotely. So you can put your headquarters anywhere. So why not stick it in Fargo, where I have fantastic policy, fantastic regulations, pro-business governor in Burgum, low taxes, and an environment where they want business. They don't hate you, they want you there. And so that's what we're doing. We're running a mandate, the first 45 million or the next 45 million we're putting into North Dakota. We're telling every company anywhere, you want to build up more resources? Let's do it in North Dakota, where we have the second largest Microsoft campus, one of the largest manufacturing facilities for biotech and vaccines, massively educated workforce, great standard of living, access to schools. It's a beautiful place, a huge arts community, so much to do. Bismarck, Fargo. There's only 750,000 people in the state. It's the fourth largest GDP per capita, and it's going to become the first in the next 3 years because they have mountains of energy. I love this place. It's absolutely fantastic. So why would I give anything to Elizabeth Warren? Why would I leave anything there? So she can punish me for success? Nah, I'm going to Fargo. That's the plan. Florida works, Texas works, Montana works, South Dakota works. Anywhere except where they hate business. That's the new strategy. Competition of states.
Yeah.
FTX turned its own page. The judge has told everybody involved to stop talking to each other. So we're not going to hear a lot of news out of that. I don't think there's going to be any dialogue at all except recovery. The whole narrative at FTX now is about recovery. If there's one silver lining on this whole FTX thing, it's the fact that it poked the bear in Washington. I'm getting countless calls from senators and congressmen and women who are interested in pushing the agenda on policy and regulation around digital payment systems first. And so I think what's going to happen here is we're going to be a much better place within 12 to 14 months because it's a bipartisan effort. Finally, we've got people that are saying, look, we got to stop having these companies blow up. Since you and I last talked, Genesis filed for bankruptcy. They're going to keep going bankrupt because they're so full of rogue players and no-do-gooders and, fraudsters and all this stuff. Everybody's tired of it. It's just setting back the potential of what crypto and digital payment systems can be. So my guess is, Danielle, and I bet you I'm going to be right on this, within 3 years, you're going to see that all of these rogue players and these unregulated, decentralized, exchanges and all this crap is going to be gone. And the players that are here today won't be around because they don't know how to make money in a regulated environment. It's going to be the new disciplined players that come out of the banking system that run the crypto markets, and they'll work within compliance, and it'll be something that'll grow. And I believe will still become the 12th sector of the S&P. But I think our rogue days are behind us. Maybe 3 or 4 or 5 more bankruptcies just to clean it out with all the terrible managers and fraudsters. They'll all be gone. Then everything else will be cleared out, scrape the, like a patina, all the garbage will be gone, and then we can move forward. I don't think SPF is allowed to talk to anybody anymore, nor any of the management of FTX. The judges shut all that down. The narrative is really about what's going on in the 1.2 billion plus 400 million plus 4.2 billion. These are the amounts that have been found in various jurisdictions. Everybody's talking about, okay, how do we allocate that now to the account holders, the equity holders, if anything? So, I think FTX is behind us. Everybody kind of knows what happened there. I don't think you're going to hear much out of it for a couple of years. I think people are looking at these lawsuits the SEC just put on. They're suing a few of these exchanges. Justice is after a couple. There's some audits going on. Genesis bankruptcy. There's always going to be someone going to zero for a while. So I think the narrative, the market's not even looking at that stuff anymore, Danielle. What's going on are people are focusing on AI. This whole ChatGPT, the Microsoft acquisition, that's where the new focus of the market is in what's next.